Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 15th of June, 2017. Now, let's talk. Here we are with the gold down $20, but what did I tell you in yesterday's video? The last prints of the day were between $12.60 and $62, so it's really just another $7 break. It all has to do with the settlement prices coming in at 12:30 p.m. Central Time, the Fed announcement at 1 o'clock, and Ms. Yellen's then press conference at 1:30. Very important to the market also is the stock market's not breaking much on that news. It held it. So the gold market is the one that felt the pressure, with the dollar on a good-sized rally and a bunch of currencies just all over the board, especially the yen taking it on the chin with the euro currency. So what's going on and where are we? Well, I do want to tell you, and I'll come back to it, I did write my gold report. I want you to check in your mailbox if you've signed up for any of my free offers in the past. If it's not there, check your junk mail. Sometimes they go there, and you'll see Ira's gold report. If not, we'll tell you how to get it right at the end of this. But I wrote it using monthly charts for those of you that wanted something different, wanted a much longer-term perspective on the market. I think I gave it to you via the monthly charts. Monthly charts are not easy to trade off of, but they do often show a big picture. And we're there in a big picture. So let's take a look at the weekly chart because it is important. You tell me where you're at. You're right at key support at 1251. Market hit 1250.30. It held it. On this chart, you have not lost your bullishness. You still have higher lows, higher highs, and you are over both key 200-day and 100-day moving average of closes. There's layers of support underneath the market. When we come to the daily chart and an area chart of closes, you've dropped now from 1298.80, and we're going to close today around 1256.20. So that's what I put in there so you can see about where it's at. And you can see how this market looks. Now, I pointed something out to you yesterday. I said that, gee, we have an outside day up because of how they settle the gold, but I know the market was trading right at that lower number right into the last 10 minutes of trading, which was 4 o'clock, not the 12:30 Central Time closing time, Eastern 1:30. So I was looking at that. You take it out, and you're dropping down. And today, you've continued that drop. Okay, so now we're into this area of support, and the question is, what does the market do from here? When we put on the swing line, things really straighten out better. You've got a pattern of a higher high and clearly a lower low. So the market has no trend at all. The market is also trading underneath the 18-day moving average of closes, with next support coming in at the 100-day at 1250.40. I think that 1250.40 is a very important number. We'll see what happens. Am I bullish? No. Am I bearish? No. I'm nothing in the gold right now. It has no trend on the daily charts. When you come to the Bollinger Bands, it offers support to that 100-day average of closes because these two numbers are so close together. So assuming you get further slide tomorrow, I would not be surprised at all to see the shorts start covering their positions down there and going back to the sideline. Just wouldn't surprise me at all. Momentum-wise, with the break now, you've got a 25.5 reading. You're oversold as can be. So we have a market that I'll call not trending, oversold, approaching support of the 100-day average in the lower Bollinger Band, potential short covering areas, but certainly not on this chart, a buying zone. When we come to the gold ETF, you have a downtrend. You now have a pattern of lower highs, lower lows. Like the futures market, the 118.50 and 118.40, the 100-day average in the lower Bollinger Band, come in on this market about $1 lower, 80 cents lower in an oversold condition. What do I think? I think if the market gets anywhere near there, you're going to see a lot of short covering. Just the way that you had people bailing on the upside here, I wouldn't be surprised to see that. But the trend of this market is down even though it's oversold. In the GDX, the gold miners, oversold, lower highs, lower lows, hits the lower Bollinger Band at 22.03 and stopped there. Your last trades are 22.10 with the 21.96 low. Can the market break this pattern and break out to the downside? Of course. It can do it in all of these. But, the word is but, will it? That's the big question. So far, the failures have been to the upside. When you have tried these upsides, you have been stopped at the Bollinger Band. I have no reason that won't happen with an oversold condition at hand on the first runs in the GDX. We'll see if I'm right or wrong. Then we get to the August gold versus July silver, the gold-silver ratio. And it's still in an up thrust. You've had another bounce back to 75.12 today. And on the silver, you can see you're down to the lower Bollinger Band. And the one thing you have to admit, so often you get to these bands and the market stops. It doesn't have to. Let's take them off the chart. What's stopping it? What stops it on the rallies back here and the first breaks down here is the understanding of how important they are to a lot of traders. Not to everybody, clearly, but there's enough there that it's like the old Merrill Lynch ad. You remember when the bulls were running through the streets? You wanted to be with the herd. If you stood in front of it, they went over you. Well, that's the concept here. That's the thinking. So you're oversold in a downtrend, and you've hit an important price objective. In the copper, right down to the lower Bollinger Band, and bang, you turn right back up. What is the market? I feel like Emerald when I do that. Bang. And the market's got the higher high, the lower low. It is still not trending. Momentum is pointing down and bias is down. But it's clearly not trending. And more important, this challenge of the 100-day average of closes really stopped the market when you look back at it. And it's so hard when you're at it. People will say, oh man, this market's breaking out, it's going. I keep my senses. I always say, well, you're over the upper Bollinger Band, you're a test there, and you were back here. And I know I said it, go look at the tapes, and bingo, now you're at the lower Bollinger Band, and I got to say the opposite. This is an important support zone initially. You're still not trending in the market. In the platinum market, you are still in a downtrend. Lower highs, yes, this high is underneath that one, lower lows, and so far each challenge of the lower Bollinger Band is where the shorts are covering. The pros have been, I think, selling back at the 18-day average, covering down there. But now they might change a bit because the momentum is oversold. So when you get to a lower Bollinger Band and oversold, you got to ask yourself, is this going to be a whole new trend or what? And look at what stopped this rally, the 100-day average with that upper Bollinger Band. So the metals, as I call them, the industrial metals, they, like the copper, they've had their problem up at these key numbers, up at those averages. The one that is defied it all is the palladium market, which continues to gain on the platinum. And that's how most traders that I know that trade the palladium and platinum, they seem to always spread one against the other. And this seems to be the play that they're doing at this point. Dollar index, you went from lower Bollinger Band yesterday to upper Bollinger Band today, and the market stopped in both spots. So I still say the Bollinger Band's important. Now traders have to make up their mind. What is the next trend for the dollar? You don't have one right here. You've got a pattern of a lower low and a higher high. That is not a trend. You have upside bias because you're over the 18-day average. Momentum is pointing up, but you're into that key resistance. Do you add a leg and start breaking it out to the upside, or does the market decide to pull back here and stay within this for a brief period until it decides what to do? I'll let you figure that one out. Now, as I said, I wrote my long-term gold report. I have not written one this year. So this is all about monthly charts. And let me tell you what I did. I took the monthly chart of gold, and I added to it the indicators that many of you are familiar with, and then I added MACD to it. I point out where you're at on that monthly chart. I didn't bother with the dailies or the weeklies because so many of you like to know a longer-term picture in the gold and what's it look like. I'm not going to spill the beans here. You've got to get the report to read it. I will tell you, I gave you 2 breakout points on the chart. I will tell you that we're at a very important area. And now what I will tell you is to get it, you either get my market research, and I've offered a free 20-day trial. If you've received it before, I sent you the gold report. Either look in your regular mailbox, your email box, or go to your spam or junk mail. It could be in there. Otherwise, call my staff and or go to our website to sign up for the 20-day access to my research, and you'll get it. You can click up here if you're watching me on YouTube. If you're not, you can call us at 866-973-2077. You can go to our website at www.iraepstein.com. There'll be a carousel of free offers. Click on it, fill out the form, or underneath us on many websites, the site will say, click here for Ira's free offers. Do so, and we'll take it the rest of the way. Thanks for watching. Get that report, and I'll see you all tomorrow.